Hello and welcome to my channel, InfoCraze. Today, we will try to understand some important terms related to trading account and profit and loss account, which are very crucial for providing insights into a company's financial performance. This video will be very useful for students and professionals in the field of finance and accounts. Thus, please see the video till the end for availing maximum benefit. Also, request you to subscribe to my channel and hit the bell icon for instant notification for similar videos in future. Now, let's get started. In order to have a clear understanding of these terms, let's consider a sample trading and profit and loss account. Please note that this is a simplified example for illustration purpose only, and actual statement may contain many more heads, which will depend on the specific nature and scale of business. Let's look into the trading account first, which looks like this. In this sample statement, gross profit is the balancing figure, that is, total of credit side minus the total of debit side. Two important heads in this statement are, gross profit of 100,000 Indian rupees and revenue of 308,000 Indian rupees. Let's focus on these two heads, gross profit and revenue. These two heads provide us with the gross profit margin, which is defined as the ratio of gross profit to revenue, multiplied with 100. In the same trading account, let us look at the opening stock of 50,000 Indian rupees, total purchases of 218,000 Indian rupees and closing stock of 60,000 Indian rupees. As you may know, purchases include direct material, direct labor, manufacturing overhead and other direct costs. Thus, in the given example, cost of purchases will include carriage inwards also. So, we focus on these three numbers, which gives the cost of goods sold, that is, COGS. Hence, COGS is equal to opening stock of 50,000 plus purchases of 218,000 minus closing stock of 60,000, which works out to 208,000 Indian rupees. Now, we focus on these three heads. Cost of goods sold of 208,000 Indian rupees, opening stock of 50,000 Indian rupees and closing stock of 60,000 Indian rupees. These three heads give us the inventory turnover ratio, which is obtained by dividing the cost of goods sold by average inventory. As we know, average inventory is calculated by dividing the sum of opening stock and closing stock by 2. Thus, the formula for inventory turnover ratio is this. Now, let us add other items to the trading account to review the profit and loss account. Gross profit amount of 100,000 Indian rupees obtained in the trading account is transferred to the profit and loss account. Then, the operating expenses are entered in the debit side and non-operating income, like interest received, if any, is entered in the credit side. In the given example, we do not have any non-operating income. The balancing figure of 35,000 Indian rupees is the net profit, which is also called the PAT, that is, profit after tax. This amount is transferred to the capital account in the balance sheet. Let's focus on these two heads, net profit of 35,000 Indian rupees and revenue of 308,000 Indian rupees. These two heads provide us the net profit margin, which is defined as the ratio of net profit to revenue, multiplied with 100. Now, let's focus on these four heads now, net profit, that is the PAT of 35,000 Indian rupees, interest of 8,000 Indian rupees, depreciation of 7,000 Indian rupees and income tax of 15,000 Indian rupees. These heads provide us the earnings before interest, taxes, depreciation, and amortization, that is, the EBITDA. It is calculated by adding interest, tax, depreciation, and amortization expenses to net income. Next, let's look at earnings before interest and taxes, that is, EBIT. In the formula for EBITDA, if we remove depreciation, then it gives the value of EBIT. Thus, EBIT equals net profit plus interest plus tax. Thus, EBIT may also be expressed as EBITDA minus depreciation or amortization. We get 58,000 Indian rupees, which is the same as calculated in the previous working. With this, we come to the end of this video. If you find this video useful, please like the same and share it with your friends. Also, subscribe to my channel for many such interesting videos. If you have any question, please mention it in the comments section, so that I can reply back. You can also check my videos with more details on financial statements and accounting basics. Thanks for watching.